Markets hold their breath. What's next for inflation data in Wall Street? But here's where it gets controversial. Will a single report decide the fate of investor confidence? As the clock ticks toward Thursday's critical inflation update, stock futures are hovering near unchanged levels, leaving traders in a holding pattern. This tension comes after a blockbuster week for the S&P 500, which just notched another record close. Powered by Oracle's eye-popping 36% surge, the kind of move not seen since the early 90s dot-com frenzy. And this is the part most people miss. Oracle's rebound isn't just about one company. It's a bullish signal for the entire AI sector. Stocks like Broadcom, AMD, and Micron are now riding the same wave, hinting at a broader tech rally even as the rest of the market struggles. But what's driving this optimism? Let's break it down. Wednesday's quiet futures action, SP and Nasdaq flat, Dow up 0.08%, reflects a market waiting for clarity. Investors are fixated on Thursday's August CPI report, which could either validate or shatter their optimism. Economists are predicting a 0.3% monthly rise in consumer prices, 2.9% annual, and a 3.1% core CPI increase. That's below the Fed's 2% target, but not by much. Meanwhile, the recent PPI surprise, a 0.1% drop in prices, has traders whispering about a potential soft landing. The PPI signal is hard to ignore, says Barclays' Julian Lafargue. Unless CPI shocks to the upside, the Fed's dovish stance might stick. But here's the twist. What if the data splits the difference? Imagine CPI misses expectations while PPI trends lower. Would that be enough to convince the Fed to pause rate hikes, or would markets demand more proof of cooling inflation? That's the debate heating up in trading rooms right now. And don't forget the side events. Thursday's jobless claims and budget updates could add fuel to the fire. Plus, watch for Kroger's pre-market earnings and Adobe's post-market report. Both could tip the scales. Speaking of surprises, after-hours trading delivered wild swings. Oxford Industries shot up 14.7% after beating earnings estimates and softening its tariff concerns, though its revenue fell short. Meanwhile, Alibaba's U.S. shares dipped 2% after announcing a $3.2 billion convertible bond offering, a move that raises eyebrows. So what's next? The coming days will test whether Oracle's AI-driven rebound can sustain momentum or if inflation data will force a recalibration. And this is the question we want your take on. If CPI surprises to the upside, will the market finally abandon AI stocks for safer havens? Or will the tech rally prove resilient? Share your thoughts in the comments. Let's hear who's bullish and who's bracing for a correction.